Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 14th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today here in the United States, although we did get the crude oil inventories number. Now, if you remember the last time we got crude oil inventories, there was a massive drawdown due to, in part, the disruption in delivery of oil to the Gulf Coast because of the hurricanes down there and the tropical storms. So up the East Coast as well. So that was a big drawdown. Now we're starting to see some of this stuff come back online, not as much as we would like to. It's going to take a little while for that inventory to actually get tabulated, but they were expecting a build of 2.8 million barrels. We actually had a drawdown of 500,000 barrels of oil. Now that caused crude oil to really spike higher up into the 45 handle earlier on today, but as the euphoria has kind of worn off, we're starting to see a pullback here in crude. As you can see, crude oil down at $44 a barrel, breaking below that. When it rallied up, it was testing that value area that I've talked so much about, the point of control, and it has since broken down, and this resistance area or this Fibonacci retracement just did not show a whole lot of support right there at the 50. So that is a little bit discerning. It's going to really be dependent as to whether or not we can settle above or below that. If we settle above that, it'll still act as support, but if we settle below that, it could really start acting as resistance. And as you can see, we start really seeing this value area or the point of control area where the most time and volume is start to slack off. So if we get much below that, it's really going to want to dive down here to right around this $41 a barrel area. So keep that in mind. Those are the 2 points to really keep an eye on. This area right here, right around $44, let's call it, down to $42 are going to be the two areas to keep an eye on for crude oil going forward. Then we got gold giving a little bit of push to the upside today, up almost $4. The overall market just kind of going higher after this initial sell-off. So it could be just a little bit of profit taking going on. But again, we did go below that 50-day moving average that I've talked about, and we are below that 9-day moving average, which indicates more bearishness in that market. So keep those two lines in the sand in mind going forward. Bonds cruising higher today. They were up a point just a minute ago, but yesterday came down right to the point of control. This is where the most time and volume's been spent over the last year, and going to be a comfort zone for that market, and right up against the 200-day moving average. We moved above that today, so that's positive for the bulls in that regard. Then the NASDAQ, we got NASDAQ really leading the way. It's actually kind of been one leading the way to the upside on Monday. Yesterday was really the laggard to the downside. Today really blasting higher. But most of this is due in part to Apple. Apple is just screaming higher the last 3 days. It was one of the few stocks yesterday that was still up. It was up $2 yesterday, up another $4 today, and is really pushing higher. A lot of people liking this iPhone 7s with the two cameras. So that seems to be the real big thing with the iPhone right now, and Apple to get it to push higher. As you can see here, E-mini S&Ps are not up nearly as much as what the NASDAQ is, even in percentage terms, but E-mini S&Ps up 5 points. Like I said, NASDAQ is up huge because of Apple. I mean, Apple is up $4.50 right now. So I'll talk about that a little more here in a minute. E-mini S&P is really stuck in a range, actually an inside day from yesterday, if you can believe that, but it is really considered an inside day. It's slightly outside on this value area high, but for all intents and purposes, it is still an inside day for the E-mini S&Ps if you look at the 15-minute breakdown on that. Here's that chart of Apple, and it just has not relented in the last 4 days. We gapped up from from Monday to Tuesday, and then today it's just screaming higher. It just has not come back, up $4.50 right now. So with Apple, as you guys know, I am short some Apple. I've basically done a lot of different things with that where I'm actually short calls in there. I'm short the 100 calls, so I ended up getting a little bit more aggressive and got a little inverted in this market because I went in and sold the October 105 puts for $1.07. So what I'm trying to do is really increase my break even on this Apple trade now that it's up in the 110, 112 area. It went above 110. I just really didn't see it blasting through this value area high as it has. I thought this was going to act as a lot more resistance, and it just cut through it like a hot knife through butter. So I got aggressive with that as soon as I started seeing that happening and sold those puts. So now I'm short the 100 calls, short the 100 puts, which creates a little bit of inversion. Now, the reason why is I don't really see Apple coming back down really anytime soon, at least at that 100 level. We got pretty close on Monday and just didn't come through. So now I'm in defensive mode with this even more so. So going to try and lower or increase my break even by selling some more premium in there. Just staying mechanical, waiting for a pullback, and then I'll look to cover those. Then in Colgate-Palmolive, which is ticker symbol CL, I just decided that, with like Apple, I needed to add some long deltas in my portfolio. The markets seem to have found a little bit of support and wanting to move higher. Apple, I needed to add some long deltas to that short delta position, and with Colgate, I decided to add some long deltas in there because Colgate-Palmolive, those are brands that even in an environment or an economy that's not doing so well, people are still going to be buying toothpaste and things of that nature and beauty products, if you will. So that will still push higher even if the economy is not doing so well. So I decided to add some long deltas in Colgate-Palmolive and did the October 67.5 puts and sold them for 45 cents. And just a little bit of note where I'm talking about adding short deltas, adding long deltas, that just means you're biased to either the upside or the downside. Usually my portfolio is short deltas or negative deltas, which means I'm biased to the downside. So with this big pullback that we've seen here, I'm starting to add some long deltas into that portfolio to take advantage of any upside movement in the market. All right, so that's how I play around with my portfolio, playing with short deltas, long deltas. I've had a nice move down with the short deltas, and now it's gonna it feels like it's a little bit long in the tooth possibly, so I'm starting to slowly add some long deltas, and with the increased volatility that we've gotten, as you can see here, that's the time to start taking advantage of selling premium, because when you get that volatility contraction back out of those markets, then that's where you're going to make the most money, is when those premiums start, when the volatility starts coming out of the market. It allows theta decay to happen really quickly, and then those premiums decay rather fastly, even quicker than normal. So that's what I'm trying to take advantage of right now. All right, that's all I got for you guys today. Tomorrow I'm going to be doing a webinar with Steve Bigelow. I'm going to be talking about several different things, some option hacks and some other things, so you can check that out at Pro Trader Strategies. Then Friday we're going to be doing a webinar on synthetic short underlying. So, and rather than going out and say shorting Apple and putting all that margin up to get short it, having to borrow the stock to be short that underlying, we're going to synthetically create a strategy where you can be short that underlying. It's going to perform basically the same way as being short the stock, but with about a quarter or half of the margin, depending on how you look at it. All right, that's all I got for you guys today. If you can't take that, take it easy.